So we are going to start right out. Thanks for taking some time out of your evening. By the way, I see that some people are typing some things into the questions box. It's highly unlikely that I'll get to them, but you're certainly welcome to put anything in there if you like. But again, it's highly unlikely. Thanks for taking time out of your evening. Like I said, I didn't even mention what this webinar was about, and there were about 900 or so people signed up for it. So what I want to do is just basically talk about the general market that we're in. And then one of the most common things that people ask me is how I find the ideas that I trade. And it's a manual process, but what I don't do is I don't look for longs and I don't look for shorts. I don't run scans saying, show me stocks that look vulnerable based on these conditions, or, stocks that look like they might rally based on certain conditions. Instead, I've been doing this full time since 1991. I've been doing it looking at the same way, looking at a large universe of stocks each and every evening and drilling that down to a smaller watch list. And what we're going to do is go through about 50 or so stocks that I want to talk about for the potential of a trade for the week ahead. Everything that I talk about, by the way, is based on a swing trade time frame. It might be a day trade based on the volatility in the market. There's a lot more opportunity for day trades, and there's a lot more reason to day trade simply because holding overnight risk doesn't make as much sense when we have this type of volatility where, for instance, right now we're gapping down 2.3%, and it's holding above the volume weighted average price off of the low on Thursday. So, for as far as the futures go, if we talk about the SPY, what we'd really like to see is it hold the 5-day moving average. I think that's highly unlikely, but that 5-day moving average is starting to flatten out. This is the volume weighted average price from the beginning of the day on Thursday. So keep an eye on that tomorrow. If we come down, let's say towards that in the S&P 500, on a gap, or just if it comes down and then continues lower, it has the potential to find support. But it might end up doing something like this, getting trapped under that volume weighted average price from the low. And if that happens, it means the average participant who thought this was the bottom, it will now be losing money. The average short will be making money, putting the sellers back in control, so that when we look at what's this 10-minute time frame right here, each one of these candles represents 10 minutes, we need to move over to the bigger picture, which is the 30-minute time frame. On this 30-minute time frame, we see pretty much the same thing. Here's the 5-day moving average, and you can see when I draw on this time frame, it shows up. Well, actually, that didn't. Anyways, the moving average is in that too. But what we see here is the 5-day moving average. That's the orange. The volume weighted average price from the January 24th low. We came pretty close to that, and that was kind of the level I'd spoken about a number of times last week as far as where this market had the potential to run. That and the month to date volume weighted average price is this black line. You can see they also show up over here. That's the month to date, and that's from the January 24th low. So if we're going smaller time frame to larger time frame, here's the daily time frame, and on here I have this blue. This is a 20-day moving average. Green is the 50. All year I've been saying don't trust this market with a declining 20 and 50-day moving average. That dips, that pullbacks are that rallies are just simply a bounce in a downtrend. Now, if you look at where we bounced almost precisely on Thursday, that was a level I'd been talking about Wednesday and Thursday and Friday, which is the volume weighted average price off this September 21st high. Why is that important? I don't know. It's an important turning point. I like to anchor volume weighted average price levels from significant highs and lows, including the volume weighted average price, of course, from the COVID low. And if we look at the NASDAQ, you see that we came almost perfectly to that volume weighted average price from the COVID low. And in the Russell 2000, we've seen two tests so far of that. I've also pointed out that's also a 38.2% retracement of the COVID low to the recovery high. So, in here, we're stuck below this pink line, which is the year-to-date volume-weighted average price. So what I'm trying to do is kind of lay the picture, the landscape out for you first. And so in this upper left corner, I have a weekly chart. This is a daily time frame. 30-minute candles here and 10-minute candles. So it allows us to look at multiple time frames together. And by the way, I did mention that I will be giving away 2 copies of my book, Technical Analysis Using Multiple Time Frames, to 2 people. Those 2 people will have to be here at the end of the meeting to get it. I will give you some kind of very simple question to answer, and it will be whoever answers the question first and second, those people will win. U.S. only, and I will send you out a copy of a book that's been returned to me. I've been sitting on these 2 books for a long time, and figured this would be a good way to get them out of my possession and into someone's hands that can hopefully benefit. So, anyways, on this weekly chart, I've got just these volume-weighted average price levels and a 40-week moving average. That 40-week is black, and of course that represents the 200-day moving average. 5 days in a week over 40 days is 200 days. Now, of course, there's half days in there that, so it's maybe more like a 197-day moving average, but it doesn't really matter. It's in the same spot. Again, over here, 20 and 50-day moving average. This blue line is the year-to-date volume-weighted average price. That orange is, of course, this volume-weighted average price off the COVID low. And this orange down on the lower 2 intraday timeframes is the 5-day moving average. So every chart I talk about will have those on there. So what I want to do is take you through a number of stocks and show you why I think they have the potential for a trade opportunity in the next week and what it would take to get me interested. And we have to remember, of course, that the market, we can spend all weekend looking at chart setups and analyzing potential scenarios, but a gap can ruin things completely. So we have to, realize that it's a long way till tomorrow morning. Who knows? Maybe they strike peace overnight. Obviously doesn't seem likely, but if it did, then this market would rally huge and, all your short candidates would get destroyed. And, it's just a time in this market to go slower. And one more reminder, everything I talk about is from a swing trade standpoint only. I have zero interest in investing. That is not what I specialize in. It's not what I do. Talk to somebody else if you have interest in that. That's not my specialty. APA, here's Apache Corp. It's of course an oil-related play, and those names have been strong. It's in a beautiful uptrend, higher highs and higher lows. We can see, like the XLE, it came right down to the year-to-date volume-weighted average price last week and didn't close below it on the weekly basis. Intraday on the daily time frame, it did a couple times, and it tested the rising 50-day moving average. Now down below, here's the problem with buying this stock, let's say on Monday. Now the daily chart, of course, it looks good, but when you look at the 10-minute time frame, you always have to ask yourself 2 questions. One, where has it come from? Well, from, just based on the low that it made on Thursday, which was $30, it rallied from 33.60. So, that's 11% in 2 sessions. That's a great, return. A lot of people would be happy, if they were up that at the end of this year, in their portfolios. So where has it come from? Where does it have the potential to go before it might encounter some supply? Well, it looks like it made it past this little band of resistance right here on this 30 and 10-minute time frame. So, but it's a little extended from the 5-day moving average, which is rising. So I certainly wouldn't be a buyer up here. It's too far extended. Instead, I would want to see it pull back, maybe like this, even for a day or 2, and then start to flatten out. And then I would put a volume weighted average price off of this peak. That VWAP might come down and look like this. And that would be there simply to tell me who has control off of that peak. Here's the volume weighted average price from that low. That volume weighted average price might come up and hold this stock up. And if it were, that would be an important clue. So this is maybe something that's going to take 2 or 3 days to set up. It wouldn't be a focus list for me on Monday. Gold is up a little bit here. Right now, it's up 1%. The gold names, the individual stocks, Yamana Gold, the weekly time frame looks good. If we take a look at the volume weighted average price off of that peak that it made in 2020, that's an important level. Here, if we put a VWAP off of that peak from the high in 2013, well, this is the first time really in a while. Well, we're back, we're holding above it once again, as well as above the COVID low VWAP and the volume weighted average price off of the high of the last few years, about 6-8 years. So on the daily time frame, again, where has it come from? Well, it just rallied from 4 to 5.25. Percentage wise, that's about 30%. So we're maybe a little bit of ahead of ourselves in here. It's starting to show a pattern of this high, a lower high, this low, and I think that it's more likely that, let's switch to a shorter term time frame here on a 15-minute time frame so we can see it a little bit better, and I'll just move this over. So if I was interested in a gold stock, maybe it gaps up tomorrow. I certainly wouldn't chase it. I would expect it kind of does something like this, unless we do see the end of the world, which I'm not expecting. Maybe it does something along the lines of this. And this is the type of analysis I always like to do, which is, anticipatory. It's not about where, it's like Wayne Gretzky. It's not about where the puck is. It's where it has the potential, it's going. And the VWAP off the peak will come down similar to the 5-day moving average like this. And then maybe, so this would be, this might not even be till the end of next week or something like that would work. So that would certainly be what I would consider a C-list idea. BRY is an energy name. Great looking weekly chart. Here's the volume weighted average price off that high. I suspect this was a SPAC in 2018 just based on the way it trades, but it's holding above that VWAP, and it has, for the last several months and tested that. So over here, you can see it just broke out of a pretty tight consolidation. This is when we had our eye on at Alpha Trends last week, and it broke that level, and now it's a little bit short-term extended. I think that you want to see this one kind of pull back a little bit as well. So far, we're not finding anything, and I'm just going, anything actionable right away. We're just going through things, looking for, not predicting, but anticipating what could come next. Boyd Gaming, this is the type of stock I want to buy. I'm not interested in buying the low in PayPal. A lot of people have, and I've been making fun of this stock simply because it's been providing me the opportunity to over and over and over again, that people have been asking me, hey, Brian, isn't it down too much here and at 220? And hey, is it going to hold the COVID VWAP low? Is it going to hold the low from the 2020 volume weighted average price? That's a level of interest, certainly, as I always point out, but it's not an action point while it's still declining, while it's below a 20, below a declining 50-day moving average. These rallies are guilty till proven innocent. They might rally up even all the way up to the year-to-date VWAP, but it's more likely if they don't scare you out, they'll wear you out. So anyways, back to our other names. Boyd Gaming, this is the type of stock I want to be a buyer of, a stock that buyers are in control of. You could say that was a shoulder, a head, and a shoulder. I'm not much into the patterns if you listen to my work, but it held on this pullback. It held where? Right at the 50-day moving average. That typically brings in buyers. That typically scares off new shorts or shorts cover there. It's at the year-to-date volume weighted average price where it bounced as well. So we have two sets of two groups of people that might be looking at that saying, hey, I buy because it's at the year-to-date VWAP. I don't look at those silly moving averages. And another group might say, I look at moving average. I don't look at those silly VWAPs. So, but there's two different groups of people coming to the same conclusion in there, which makes it a stronger area of potential support, which it did in fact find. And that was also the volume weighted average price from the January 24th low. And that was Thursday's gap. And what happened? When it gapped lower, buyers came in immediately. And maybe you didn't buy it right here as it rallied up, but when it pulls back to the VWAP, that tells us, hey, if it starts to rally again, I can buy it on strength with a stop underneath this low or the low of the day and start to raise my stops. So now where are we with Boyd Gaming? Would I buy this one Monday? No, it just came from 63 up to 70. It just rallied 10% like a lot of things. If it does something like this, comes down towards the VWAP from the low, starts to find that it's holding support and buyers, then to buy strength over here, that's the way I would look at it. So maybe late day Monday, Tuesday into Wednesday, it could become a purchase. CDMO, this is Avid Bioservices. I really don't like trading biotechs, especially on the long side, because when they get destroyed and stay destroyed. But on the short side, they make a lot better candidate for me. So here I've got, again, the volume weighted average price from the COVID low. You can see we've we're kind of bouncing around in that, and the year-to-date VWAP, which we can see with more clarity over here on the daily time frame, that we're stuck just below it. So this is the type of stock I don't want to short it as it's rallying, but I want to look at this and say the primary trend on the daily time frame, we've got a declining 50-day moving average is guilty to prove innocent. I take a little bit of points off because the direction of the 20-day moving average is higher. Okay, so that makes it a little less confident. But if this stock were to do something like this in the next couple of days, again, we'll put a volume weighted average price off of that low. And if it were to do something like this, let's say it kind of continues like this, and then, breaks back down. Actually, let's go back to this one where we can see it, and I can draw in a little bit better. So this is just a 15-minute time frame by itself. If it's to do something like this, maybe a day and a half, and then break below that VWAP, and then that 5-day moving average also, well, then I think you could, at that point, short it right here with a stop maybe above this high or whatever this high ends up being, because the daily time frame, it's a broken stock. But look at where it came down to. That same September 21st volume weighted average price was the perfect level that it came down to. So a lot of these stocks, are just candidates. They're not quite ready yet. CEIX, this is one that I actually, am involved. I'm not personally involved in it because I don't like to trade energy names. Sometimes I do, but generally I don't. I had suggested this one as a purchase for Alpha Trend subscribers on Friday at 29.42, and that was a purchase. So it's one that Alpha Trends members are currently long. Again, I'm not, but doesn't mean it's not a good candidate. It broke that volume weighted average price off the recent peak. That's of course this one. And, we saw that this prior band of resistance we're holding above. We've got a rising 20-day moving average, a rising 200-day moving average. I ought to put volume on here, at least on the daily time frame, to show you that it does in fact have a healthy volume pattern. And in that, when I say healthy, that let's just move that down so it's not so much emphasis. But it was rising on an expanding volume, and the profit taking has occurred on lighter volume. Now we have heavier volume again in here, and it's starting to stabilize and show that the buyers are regaining control. So that's one that is, appears to be on its way. We also purchased, and I did get involved in DOCS on Friday, and it did exactly what I wanted it to do, which was that, it got a little bit extended Thursday afternoon. So what I wanted to see it do was to pull back down to the volume weighted average price from the low, which it did perfectly right here. So that became the 2-day volume weighted average price and bounced from there as it got back above the daily VWAP. So that's one I'm involved in. I've taken a third off, so I have a 2/3 position, simply because the market is this, and it's likely that it's going to open down in here. I'm not going to panic. I've already taken a third off, so I'm in a position of strength, and it allows me to breathe a little bit easier going into a potential drawdown scenario in there. Let's take a look at some other ones. I'm just going to go randomly through these. CRTO, here's the weekly time frame. This one, it just, this is technical analysis 101. Stage 2 uptrend, stage 3 distribution. It breaks the low right here. This looks like the beginning of a stage 4 decline. It looks no different to me than, Roku did back in here, breaking down at this point. I'm not predicting that for CRTO, but that's what's happening with a lot of these stocks. And if it's a potential short sale candidate, my first level that I would think that, the buyers would emerge, it'd be right here, 27. So, that's 5 points away. There's good opportunity on the short side. You can see it's below this declining year-to-date volume weighted average price right here. It's below the declining 50 and 20-day moving average. Over to here, you can see we rallied on Friday right up to the volume weighted average price from the January 24th low and the month-to-date volume weighted average price. And that was so far at least the high. So how would I want to get involved in this? Maybe tomorrow, if it rallies like this a little bit, and then starts to break down, back below the volume weighted average price from the low, I don't want to short them if they're above the volume weighted average price from the low. So instead, I want to see if it does this. By the way, I see that people are typing questions in, and I'm not paying any attention to questions because I've got too much to talk about, and we are going to end, as I said, at 7:45 Eastern. So anyways, if it were to do something like this and then break down right in here, and this is anticipatory analysis, it's not reactive and waiting. This is saying, hey, maybe in a day or two it gets a little bit of a rally, or maybe it just gaps lower and ruins the trade entirely. Who knows? It's not up to me, but I have to be prepared for what the potential is and have a list of candidates and say, if the market ruins my candidates, then it tells me, I don't need to scramble and go chase something. It tells me I need to let things settle down, reevaluate, and wait. That's a professional approach to the market. So if it sets up like this and I'm able to short right in here, and that 5-day moving average is then, kind of come around like this and flattens out and turns lower, if I short it in here, then I want to put my stop either above this high, and we know it's an important level. And I'm not going to explain Fibonacci levels. No, that's again, I'm not taking questions actually. So people who are typing them, and I apologize, that's not the point of what we're doing here tonight. I'm specifically showing you how I look at trade scenarios and anticipate. It's not about, hey, I should have done this, could have done that. We have to anticipate, and trading is a lot of work. It's difficult, and if it's your passion, it doesn't feel like work. It doesn't feel like work to me. And in my stop, in other words, on CRTO would either be above this high right here, or above, if this became a new high, maybe above there. Or maybe if I short it, let's say at 32.10, I would put half my stop just above here, let's say at 32.78, and the other half maybe at 33.45 above that high. So I don't have to have all my stop all in one place, because maybe it makes that low, comes up here, and then just completely gets the shit kicked out of it. I would feel like a fool if if I had gotten stopped out of the entire position. If I had half a position, who knows? Maybe I would add again over here as it breaks back down. But if it rallies up to here, well, it makes it a lot less likely that it's going to fail. And then maybe I would, even anticipate and just get out ahead of it early. But, that's a potential short sale candidate. Datadog is, maybe a long. It held the volume weighted average price from the 2021 low almost perfectly in here. I'm sorry, from the January, the beginning of 2021, almost perfectly. That stuff is not a coincidence when you see that. It's not a coincidence in Tesla. It's not a coincidence in the Russell 2000. It's not a coincidence in the Qs. This is how stocks trade. So I forgot what chart I was just on. I can't. I got carried away. What one was it? I'm trying to. Oh, Datadog. So it held this year to date volume weighted average price on a closing basis. It gapped below it. The buyers stepped in, and then the buyers defended it right in here. They defended it here. They defended it here. So clearly, from that event is an important level. Now, it doesn't mean you should set your stop below there if you're long, but it says that's an important level. Let's see if maybe is it going to do this and then turn back up, or if it comes down, is it going to get trapped under it, and then you want to sell it, let's say right here, would be the way that I would look at it. But if I'm not long, which I'm not, this is a nice, we had a big volume gap up, most likely because we're in earnings season. That was an earnings related gap. Now, what do we want to do? Well, that was clearly an important event. So what do we do when we have an important event? We anchor a volume weighted average price to it. Why do we do that? Because we want to say who's in control from that point. Well, from this point, we already established the buyers are in control, right? So from this low, but from this high where we had that event, a big shift in the supply and demand, the sellers are in control. So we've got mixed messages like we do on a lot of stocks right now. What we're looking for is time frame alignment, trend alignment. We don't have that here. We have, if we were in a healthy market, I think what would happen with this stock in particular, with Datadog, would be, let's go over the 15-minute time frame over here. We have more room to draw. I think a more likely scenario would be, maybe it kind of does this, a little shakeout, goes back and tests that volume weighted average price from the January 24th low. And then, that 5-day, so it has a shakeout below the 5-day moving average. The 5-day moving average is declining, and it will continue to decline here on Monday because we're getting rid of this data 5 days ago. So again, it's anticipatory analysis. It's not saying, hey, well, the 5-day moving average is declining. Well, what will get that 5-day moving average to flatten out and rise? Well, we have to have these prices higher than the 5 days ago. So it's not likely that it's ready to go on Monday because we're replacing this. So we want to see that flatten out. So it would be nice to see, like I said, a shakeout, and a shakeout even below the volume weighted average price from this recent low. A shakeout, but a quick recovery back up. A shakeout similar to this shakeout right here that we had just observed. Anyways, back to the 15-minute time frame. So if it were to come up like this, and maybe get trapped under that month-to-date volume-weighted average price, that's that black line. And you can see that that's been resistance, resistance, resistance. So if it pulls back like that, has a shakeout, that which doesn't kill it makes it stronger. New shorts get involved. That robs selling supply, sellers. Short, other people get stopped out, and then it rallies back up and does this. I would want to be most likely a buyer right here with a stop, again, underneath this higher low, or maybe this higher low, or stagger them, half of it here and half of it there. I would also be aware that this volume weighted average price since the earnings event is coming down on it, and I would most likely look to sell a third right there to see how it handles that. If it rallies right through it, great. If it does this, I'm not going to talk about Q. I already did talk about the Q's arch, and I'm not going to talk about Tesla. I'm not taking questions, sorry. And maybe it does this, and then it really begins its real move. That's the way stocks trade. People think, hey, I can just buy it because it's up, and then it drops down like this. They get emotional. Learn the structure of how stocks trade and anticipate. This is all made up potential scenario, but it's based on the way stocks trade after looking at them day by day like this for the last 31 years full time. This is how they trade. If it doesn't set up this way, how much money do I lose? None, because I'm not going to buy it here today, right now. It's just this chart right now. All that other stuff is in my head, but it's in my head because I've been, my muscle memory tells me this is how stocks trade because, again, this is what I do every single day of my life. DWAC could get going. It's a wacky little thing. I put notes on all IPOs and SPACs about what they are and where, what price they were about. And anyways, it's choppy as shit. Look at, we've had a rally from 78 to 94. I mean, you've got to be a skilled day trader to participate in this, or just a believer in the Trump media thing. And who knows, maybe people who, say that Putin's thing was a good idea, maybe they punish his stock Monday morning. I'm not going to make political opinions, but you have to understand the psychology, at least, of what frames the decisions of the fundamental investors. And it might be just that. I don't know. I don't have an opinion. I don't care about this stock. I only care about it if I get involved in it. The most important price on any chart, on any stock, is the one that you paid for it, or the current price relative to what you paid. Sometimes people say the closing price is most important. Why? You can't even do business there. The market's closed. It's closed. What's so important about that? You're trapped at the close. During the day, what's my price relative to what I paid? Can I make a decision and liquidate this or hold on to it? Gold is up, like I said, right now, 1.1%. It kind of feels like, we had this breakout. My dog called it on Twitter right in here, and we had a nice rally. And again, similar to the market, you buy the rumor, sell the news type thing. Rumor of war, you buy it. The bombs start flying. What did they do? They sold gold, because it was anticipated. Anyways, so the volume weighted average price since the bombs is at 178. We're not near that right now in the in spot gold, so we're right around that level actually. So I think that a little bit further time to consolidate in gold would be the right way to look at it. GLW is a potential long scenario. The weekly chart here, it came down to where? Probably a coincidence, right to the volume weighted average price from the COVID low, and then had a significant bounce. Now, I believe this was most likely earnings as well. So because that's an important event, we want to put a volume weighted average price on that. And, so we saw there was no reason to buy it over here with this declining 5-day moving average, and there's still no reason. And again, where has it come from? It just went from 39 to 41. It rallied 2 points. Not horrible, maybe about 7%. But I'd prefer it does something like this, tighten up that range, hold the 5-day moving average, then perhaps it's a buy. But I wouldn't be buying it right here, especially because most likely it'll open around this area tomorrow morning. Now, let's say you wanted to, let's say it opened down here tomorrow morning. Well, we could handle it in the same way that we handled the previous gap. We can, buy it right off the open and feel smart, or let it settle down a little bit and buy it right here as it emerges after this consolidation and put a stop below the low of the day. You don't have to be involved right on the open. So, I just said maybe it opens here because my mind knew where that volume weighted average price should be. And, look for tomorrow, these in all of your stocks, when they gap lower, look for how they handle the volume weighted average price from the low on the 24th, from Thursday. If they just slice right through them, there's a problem. If instead they kind of bounce around in that area and find buyers, and then they get back above, let's say it does this, and then tomorrow's VWAP looks like this, it gets back above the volume weighted average price for the day right there. What's wrong with buying it there with a stop under here, risking 30, 40 cents, and then maybe selling some as it gets up to that level just to take some risk off, because we're in a market where if your longs are, you should be taking some off, because we've got all this headline risk. We've got, of course, the war, we've got the Federal Reserve still, and we're still got a shit ton of earnings coming up this week as well. Let me see, where are we? 5:30. I'm in Colorado. I like this LI as a potential short. It's a Chinese automotive, the Chinese Tesla. It's not ready yet, but this is one I have an eye on as a potential short candidate. They're supposed to be reporting earnings soon, but the volume weighted average price off that low, I certainly wouldn't want to short it unless it did something like this. Then short it, right here, with a stop either above there or maybe this lower high. People say, what's the best place for a stop? What's your time frame? What's your risk tolerance? How long have you been involved in the market? There's no perfect place. We only know the perfect place for a stop or for an entry or anything in hindsight. I never tell people what to do. I help them decide what to do, how to look at the market properly, structurally. I'd mentioned Grin last week. That broke nicely, and it's in an uptrend, but it's extended. I certainly wouldn't be a buyer here. Harley Davidson has kind of just been bouncing around kind of crazy here. This is when they reported their e-motorcycle, and that's clearly been an important event. So we want to measure the volume weighted average price from that event here on that week. Oh, I'm sorry, it's not there. It was on the daily time frame. Was it right here? Yeah. And, the good news is we had that quick reactive sell-off, but now, if I was an investor, I would say if it gets back below here, I'd bail on it, because that's from that big event. And that's also the year-to-date volume weighted average price. And we now have the 20-day moving average, which found buyers on Thursday. And we have a rising 50-day moving average as well. That if it were to break back below there, there's a problem. Would I buy it right here? No. Why? And why not is because, again, here's the volume weighted average price from that event, which I'm just going to guess was earnings. I don't know. But, it's too close. Where has it come from? I didn't mean to use that. But where has it come from? It's just come from 39 to 41. Not a lot, 2 points, again, 5-6%. But it's at the declining 5-day moving average. So when will the 5-day moving average flatten out? Well, let's go back 1, 2, 3, 4, 5. We get rid of this data tomorrow, and then this data on Tuesday. So maybe, tomorrow it rallies up, no big deal. And it probably won't, obviously, because the market, it might come down to this VWAP, And if you wanted to take a shot on it there, be aware that, this would be a good place to take part of it off. And then if it comes down like this, maybe add it back right here and have your stop, under here or under here. It's all about anticipatory analysis. The market throws us brand new information every single morning. We can spend 40 hours over the weekend. We can't actually, but I guess you could spend 40 hours over the weekend looking at all your charts, getting things set up. And then guess what? Well, some knucklehead starts talking about nukes over in Europe, and things change. So we have to be aware that these are just ideas. Don't get married to your idea. Don't get married to the thought that, wow, I spent all this time looking at Hartley, so I need to buy it now. This stock I need to buy. INVA. Is anyone having a problem seeing the drawings? Someone is saying that they're having a problem seeing the drawings. No one else has mentioned that because I'm drawing a ton of stuff on here, by the way. Did I hit the recording? I did. Ryan says looks good. Everyone says they can see it. That's on your end, Irene. INVA. I have no idea what these guys do. It doesn't matter. Nice weekly chart. This daily time frame. Again, most likely an earnings related gap right here. We saw a nice little shakeout on Friday or Thursday. And you know what? The buyers took control. I spoke about this one to subscribers saying, here's what I'm looking for. Kind of the same thing, that I've been talking about. It comes down, maybe shakes out below that volume weighted average price from Thursday. And then we want to see that, VWAP from the peak do something like this. The 5-day moving average flattens out. So here it's probably, again, a couple days early. You don't have to trade tomorrow. Most people who trade tomorrow probably shouldn't be. I would bet. And because they're in a very emotional market where we've got all kinds of, outside stimulus throwing at us that can change it in a moment. Gelled. Do you think I like this one as a long or a short? Here's the weekly time frame. Here's the daily time frame. First person to answer correctly gets a book. First person was Ryan Dugan. Ryan, and everyone's saying long. There was one short. One person said long. Absolutely a short. So Ryan Dugan, you are the winner of the first book. And I have one more. Please send me an email at one. That is number one, numeral one, bshannon@gmail.com. And with your information. If you're in the United States, I will send you a copy of the book. If you're not in the U.S., you can pay for the postage. That's up to you. But send me an email with your name. Anyways, so yes, a short. Look, it's stuck below the volume weighted average price from the COVID low. We all know that was an important event. It's stuck below the declining 20 and 50-day moving average. Here's the year-to-date VWAP. Now, do I want to short it right now? No, because it's still, it's got some short-term momentum higher. And if we look at the VWAP from that low, it might end up being that, hey, maybe it turns into a long. But what I'm looking at here on the 15-minute time frame is, let's say it kind of, tomorrow it gaps lower with the rest of the market. Maybe it comes down to this 5-day moving average. And that 5-day moving average starts to flatten out in a day or two as we get rid of this data. Here's the volume weighted average price from Thursday. And maybe it does this. I wouldn't short it yet. But if it did, consolidated a little bit, I might want to short it right here. Because then the VWAP from that low would start to look like this and trap the stock underneath it. If I shorted right here, my stop would most likely go right here. If I wanted to give it more room, I would say my stop would go here, maybe half of it here, and then over to the daily time frame. Again, do you think it's a coincidence that the volume? Oh, that's the SPY. No wonder. Geld, J-E-L-D. So here on this, weekly time frame. By the way, this was where we were 50 days ago. Just like I was showing you on the 5-day moving average. I want to anticipate the direction of the 50-day moving average as well. So clearly, again, here's the volume weighted average price off of the COVID low. and we're right at it. So we're at a clear level. So I want to anticipate this scenario. I'm not one who's going to short the rip, just like I'm not the guy who's going to buy the dip. I want to short weakness after the dip. I would much rather short it at 22.38 and know that it's below the declining VWAP from that low than short it at 23.30. I'd rather short it $1 lower and know that I have momentum in my favor than guesswork up in here. Maybe you prefer to, short it there because you perceive this level as, hey, this will become resistance. It's a level of interest. But again, there's all kinds of way to do it. I know the right way for me. Do you know the right way for you? I've got 5 minutes left. As I said, we're going to end it promptly at the end of the hour. So what are a couple other names that I have in mind? Oh, that's a secret page. That's not to be seen by anyone. Let's see. Silica. This one took off without me on Friday. Here's the weekly chart. Just out of curiosity, I don't think I've done this yet. This is, if I was long SLCA and, clear, it's got some super strong momentum. We're not in the type of market where it's likely it could do this. 6 months ago, it would probably be easy, it'd probably gap up tomorrow to this level, but I would certainly be aware of this level. And even if I was an investor, I'd be likely to say good place to take profits. If I was interested in this as a momentum name, I would say, the rally began right there. That was the low. And from there, we saw it was defended once, twice. Now maybe Monday, maybe tomorrow it gaps down in here, does this, and then gets back above tomorrow's VWAP later in the day, buying it here with a stop under there, and then maybe, who knows, maybe it continues up towards that level. It's all about looking at different time frames and anticipating. Nobody knows the future. When people say, hey, you have resistance there, nobody knows that that is resistance. We'll know well after the fact. That's a potential level of interest, a potential level of resistance, because that's where it often finds supply is at the VWAP from an important peak or low. And that's why we look at them and say, was it a coincidence that the volume weighted average price off that COVID low found buyers here? Then we take a VWAP and say, anchor one there, and look at how well that's been holding on this recent consolidation. Those are not coincidences. This is how the market trades. Let's see. I'm trying to think of a question for a book. Who knows my dog's name? Initials are good. Yes. First one. Who did that? It is Jonathan Harrier was first. Okay, so we've got our two winners. Please, again, Jonathan and Ryan, send an email to the numeral 1, BSHANNON@gmail.com, US only, and I will send you a copy of that book. We've got 2 minutes to wrap it up here, and I will say, Ernesto says, I already run one with your presentation. Thank you, Ernesto. Kissing Ass doesn't get another book out there, and I'm just kidding. Let's see. Here's one I've got an eye on. It's renewable packaging. It's, stuff that maybe is going to be something. I like that. The volume weighted average price in the IPO is way down here on the weekly time frame. This resistance, which you could say if you want, if you're into them, that's a cup and that's a handle. Here it broke out. It pulled back. It tested it right at the 20-day moving average as well. That's also where we saw the volume weighted average price from the January 24th low. But look at where it rallied up to. It rallied right up to the declining 5-day moving average. Maybe tomorrow it opens up right down here. And, if the market starts to gain some strength, maybe this is one to buy as it moves away from there with a stop underneath here. Anticipate all potential scenarios. Wait for price confirmation on the time frame you engage before you participate. Once it stops going up, the pattern of higher highs and higher lows stops, exit. And then if it's in a primary uptrend like it is on the daily and weekly time frame, avoid it in here. You can make money shorting it, but the bigger trend is higher. So, the sum of the rallies is greater than the sum of the declines in a primary uptrend. There's more opportunity on the long side. Be aware of the market conditions we're in. We're in a heightened sense of uncertainty for the market. So keep your position size small. Make sure that when we have an easier environment again, that you have your cash ready to go, that you're not scared and you're not digging out from all the mistakes because you listened to all the stupid people telling you to buy the dip. It's 5:45 in Colorado. That means it's 7:45 on the East Coast. This is when we're scheduled to end. So have a good evening. Thank you. Good night.